Hi, this is Zach Meir from Zach's Traders Cafe with a look at some bulletin board hero stocks on Tuesday the 5th of July. Starting off with Aaron Silver, and you can see that after an extended base here just below that former February support, we've actually had a flip to the upside through the 50-day moving average at 0.99 pence. That's a decent reversal signal, at least an initial reversal signal. Could indicate that we're going to break out of this converging triangle and hit a target as high as 1.7 pence, which is a February resistance line projection heading in that direction. At this stage, only back below yesterday's low around the 0.9 pence level would really suggest that this is just another flash in the pan move to the upside. Obviously, silver roaring ahead at two-year highs, so one would hope that there are some decent small cap proxies to that move. Next up, stock which I haven't looked at, I think, for a long time, ASA Resource Group, if at all. Here we've got a similar thing to Aaron Silver in the sense that there's an extended base for the shares in the recent past, and then the break through, in this case, the 20-day moving average around 0.47 pence. Initial target here up to the 50-day moving average at 0.62 pence. But only after we get to that would we then be looking for a target close to 1 pence, which is the top of this rising January trend channel. If you're cautious on the shares, maybe wait for the RSI to break above 50 versus 46 at the moment. Obviously, the stop loss back below recent 0.4 pence support. Now on to one of the stocks which many people have had high hopes for, but has managed to consolidate probably longer than many of them would have wished for. Jubilee Platinum really in consolidation mode since this time last year, or almost this time last year, trading either side of the 3 pence level. Looks as though we've got a resistance line here from the end of July last year running through 3.5 pence. Break of that on over the next few sessions should be enough to finally lift the shares out of their consolidation mode and then give us a retest of 5 pence. Probably if you really are cautious or don't believe that the stock is going to deliver, then you'd wait for the highs of May to be broken through 3.7 pence before taking the plunge on the upside. Best stop loss at this stage back below 3 pence, which is not very helpful, given that it's quite a large percentage stop loss, but we have had very erratic moves here, and it's difficult to be more precise than that. Onzima Ventures is next, and just update on the situation. I think the positives here are really that even with the Brexit dip in the market, this was basically unmoved. Support coming in towards 1.4 pence, and that's also well above the former resistance at 1.32 pence from March. So when you see that, you can normally assume that there will be a new leg to the upside, especially while there's no break back below 1.32 pence. The target here remains 2.5 pence, which is a line drawn from January through the March resistance, and ties up relatively well with the idea that this this consolidation here over the last few weeks is a mid-move, and we'd see a similar move to the push-up from May over the course of later in July. Next up, a stock which it's early days for as far as recovery is concerned, or potential recovery, Prospects Oil and Gas. Probably want to see a break above the 50-day moving average at 1.19 pence as an initial signal or show of strength, given the way that the last rally in March saw the shares take off quite well after they broke the 50-day line, the blue line there, at that time. On to stock which I've been hoping would be a decent bullish prospect, but hasn't actually delivered so far. But there has been a falling wedge breakout for Richland Resources for the start of this week, and that points us up to a 1.9 pence, 1.191 pence target at the 50-day moving average. That's the initial target over the next couple of weeks, but the big target here back up to 3 pence if we can get a decent weekly close above the 50-day line. Stop loss at this stage back below, let's say 1.3 pence, which is this falling January support line. Finishing off with one of yesterday's big rises, and that's TP Group. It's been on the radar for quite a while, but a slow mover and slow consolidation that we've seen since the capture or the break above the 200-day moving average in April. But it looks as though we're finally breaking out there and above 4 pence, which is the former May resistance zone. One would be looking for a target here as high as 8 pence over the next couple of months, which is a 1-year resistance line projection. That's it from me. More updates at the same time tomorrow.